Mark and Deborah from Spectrum IFA Group, because a lot of you are here today because you're thinking about moving, retiring, and what you should think about in terms of tax. And nobody is better placed to advise you on some of the pitfalls you need to be aware of than Mark and Deborah. Do come up, Mark and Deborah. Thank you.
Thank you very much. Okay. Hello everybody, I'm Debbie. I'm joined by my colleague Mark today, and we represent Spectrum IFA Group in Portugal. So we're just going to tell you a little bit about who we are and what we do, the tax benefits of Portugal as a new home, and just some tips and pitfalls that we commonly see people make that are making the move. So firstly, the Spectrum Group was established in 2003, so we've been going over 20 years now. And we are licensed and regulated in the countries that we operate. Our head office is in Paris. We obviously have in-house technical pension and investment expertise and offices across 7 European countries. And what does differentiate us in Portugal is that we are independently owned, so we provide impartial and transparent advice in Portugal. Just on a personal level, Mark and I have been advising in the UK and Portugal for over 35 years, and we've both lived in Portugal now for nearly 10 years. So we know exactly what you're going through. We are the only chartered financial planners and UK tax advisors in Portugal, so we really are best placed to provide that cross-border expertise for British nationals moving over to Portugal. And we are based in the Algarve, but we advise clients throughout Portugal and Madeira as well. Sam,
Thank you, Debbie. Good afternoon, everyone. So what I'm going to do first of all is just look at the tax and financial benefits of moving to Portugal. 2024 is actually a slightly unusual year in the tax world because we have 3 simultaneous tax regimes for newcomers to Portugal that exist. Now, the first one of which is called a non-habitual residence scheme, so NHR. And this has been a scheme that's been in place since 2008, designed to attract newcomers to Portugal, so new residents to the country. And if you qualify for that, you get 10 years where you can structure your affairs, so you're paying 10% flat rate of tax on pension income, 0% on foreign source interest and dividends, 0% tax on foreign property sales, and also for those of you that are still working, a flat rate of 20% on employment and self-employment income, if you satisfy what's called one of the high-valued activity definitions. Now, unfortunately, the NHR scheme was cancelled with effect from the end of last year. But there are transitional rules that were introduced, so some people can still qualify during 2024 if you meet certain conditions.
Do you want to look at older expert ones?
If you don't meet the conditions to apply for the old NHR scheme, there was a replacement tax scheme that was introduced on the 1st of January this year. It doesn't have a name as such yet, so some people calling it new NHR, others are just calling it NHR 2.0. What it is a similar design scheme to attract you to the country, so it's giving you the potential to earn foreign source gains and income and 0% tax again. The only exceptions, as it says on the screen, are pension income and income coming from blacklisted jurisdictions, the most common of which are Guernsey, Jersey, Isle of Man, Gibraltar. The new scheme is going to be a bit more restrictive because whereas under NHR, the old scheme, you could come without necessarily fulfilling any specific job function, so it's attracted a lot of retirees. Under the new scheme, you have to perform specific occupational functions. But there are loopholes and sort of gaps in the legislation, which means not exclusively, so there still could be an opportunity for some of you to qualify under that new scheme. If you don't meet any of the scheme criteria, so you don't qualify for either of the tax incentivized schemes, then you're simply a standard Portuguese taxpayer. Now, speaking from personal experience, I was a non-habitual resident for the first 10 years. I'm now a standard rate taxpayer, and the transition, it's not been painful by any means. And in fact, Portugal has a number of benefits over the UK. So, as it says on the screen, Portugal doesn't have inheritance tax. It was abolished in 2003. It doesn't have wealth tax, unlike our neighbours in Spain, for example. And if you're living off investment income, or if you've got cash to invest, you can get your tax rates in Portugal down very low, typically between 3 to 5%. And even if you are paying tax at the standard rate on, say, interest, dividends, pension income, we find that the tax rates are actually similar to the UK or even slightly better.
Yeah, I don't.
So just moving on to some of the issues you need to be thinking about when you're moving from the UK. One of the first things that we always do with new clients is develop a roadmap with them. And you have to be cognizant of the differences in tax shields between Portugal and the UK. So in the UK, as you're probably aware, we have an April to April tax year, fiscal year. In Portugal, we have a calendar year basis of tax. And that mismatch has two implications. First of all, you need to establish when you're going to exit the UK, the best point of the year to detach yourself from the UK tax net. And secondly, you need to make sure you stay out of the UK tax net. And there's about 160 pages of notes in HMRC's guidance covering that point. So it's quite complex, and you need to have a clear understanding. So making sure you know when to leave, taking advantage of opportunities before you leave, because there's certain things you want to be doing prior to departure, but equally there's some things that you should be doing after you arrive in Portugal. And that's the final point there. So making sure you stay clear of the UK tax net once you arrive in Portugal.
Just going to move on to some sort of top tips and common planning mistakes that we do see people make. Just for you to take away something today that you might find useful. So the first one is pensions and the PCLS. So the PCLS is the 25% tax-free cash that you have with your UK pensions here. It is a UK tax break. It's not applicable in Portugal. So we have had people that have had quite a nasty surprise, thinking they're going to get 25% tax-free cash, and they find out it's a fully taxable income payment in Portugal. So that's an example of something you would be wanting to do before you left the UK and became Portuguese tax resident. The second one is residency. A lot of people think once they move to Portugal, that's it, my home's there, don't have to worry about the UK anymore. But actually, residency is based on where you have been in a particular tax year. So as Mark alluded to before, the UK has quite sticky rules in trying to leave. You can be resident from spending as little as 16 days in the UK, or right up until 183 days. So you have to test that every year. Second is just ISAs and share portfolios. The tax breaks on ISAs, we all know from a UK perspective, no income tax, capital gains tax. Not the case in Portugal, so we have found people that have wanted to access the ISAs in Portugal and find that they're paying tax at 28%. When, if they've surrendered them prior to leaving, they've got a nice tax-free lump sum from their ISAs. So it's just about being aware of things like that. Similar with share portfolios. People think because if they don't take any money out of their portfolios, they don't have to pay tax. That's not true in Portugal. Share portfolios are taxed on an arising basis, a sale or switch of any funds, if any dividends are paid or any income's paid, at 28% or 35%. So you'll be wanting to review and restructure your investments ideally prior to moving to Portugal. Mark's already mentioned blacklisted jurisdictions, so Guernsey, Jersey, Isle of Man. They're taxed at aggravated rates in Portugal, 35%, rather than standard 28%. So again, you'll be wanting to look at moving assets out of these jurisdictions prior to moving. Inheritance tax. We meet a lot of people that think once they've moved to Portugal, they no longer have to pay UK inheritance tax. And it's not the case, unfortunately. UK inheritance tax is based on a concept called domicile. Most people here will be UK domiciled, so even after leaving the UK, your worldwide estate will be subject to UK inheritance tax. Again, that's quite a shock that some people find. Portugal does have forced heirship, so it's just something to be aware of, and that's when the state can dictate to whom and how much your assets are left to. UK nationals can get around this rule by invoking Brussels 4, but you'll want to work with a lawyer to ensure that you can do that. And lastly, it's just about taking the right advice from the right professionals. A lot of you here might have very, very good UK financial advisors or tax advisors, which might be fantastic from a UK point of view. But when you start looking at the cross-border issues or you're moving to Portugal, you will want to find that Portuguese expertise. So I've just put an example here, actually. This is the ISA and investment portfolio example, here we've got an individual with £1 million invested, and this person is taking 50,000 per annum in income. So just to show you the difference between planning and not planning. So without any planning in place, over 10 years, this individual would have paid £161,000 in tax. And that's irrelevant if they would have taken any money out or not, because as I said, interest, dividends, capital gains are taxable on an arising basis. And if they were taking the income, they would have received about £413,000 income to spend and enjoy. And with the correct structuring, you can see there's actually, you can put yourself in a favourable position where you don't pay any tax, so kind of like an ISA or a pension, gross roll-up of income and gains. And very, very effective tax benefits on withdrawals. So here, the client would have paid about 28,000 instead of 161, and would have benefited from moving £100,000 more in the pocket. So it's about the right planning in the right place with the right structures.
Okay, the next two slides are just examples of some tax planning we put in place for clients, just to give you a feel for what we do on a day-to-day basis. So this was an example of a client that came to me looking to sell his business. It was a business that he started from scratch, so he was looking for £1 million. It was all gain, basically. So in Portugal, you pay 28% capital gains tax, so the tax bill would have been £208,000. By thinking outside the box a bit, what we advised him to do was, prior to sale, he actually gifted the shares to his wife, because in Portugal, if you gift private limited company shares, the valuation mechanism is slightly unusual, and in this case it resulted in him gifting at a deemed value of 5 million. So as far as the Portuguese tax authorities know, or deem it, she acquires those shares at 5 million. She subsequently sells them for 1 million. So according to the Portuguese tax authorities, they see a £4 million loss.
Yep.
So basically, we've turned a £208,000 capital gains tax bill into a £4 million loss, with future even more, what was I trying to say? We can go forward losses, the future years to even further reduce tax. Second example, Mr. and Mrs. husband and wife, they both have trust funds in place. Now, in 2015, the Portuguese government introduced more punitive tax treatment of money coming out of trust, resulting again in a 28% capital, investment income tax rate. So they both had in excess of £1 million each in their trusts. If they wanted to take money out, again, we're looking at close to £300,000 each on income tax. However, there is a provision in the Portuguese tax code which says that if you close a trust down and the monies are paid to somebody other than the person that started the trust, then it's tax-free. So Mr. closed his trust down and gave it to Mrs., and Mrs. closed her trust down and gave it to Mr., and neither of them paid tax. So again, we've turned over £500,000 into £500,000 in tax into a zero tax bill. So that's it from us. Thank you all for your attention. Thank you all for coming. It's been a very quick overview of Portuguese tax and some planning ideas, but we are around all day. It'd be great to see you over at the stand and we can have a one-to-one chat with you. Thank you very much.